Welcome back. In today's video, we're going to talk about NVDA. Their earnings call is tomorrow. Their earnings report is coming out tomorrow. And I think there is going to be some movement in the stock. So this is a stock I've talked about quite a bit on the channel. I'm going to show you the trades that I have going into earnings and how I'm going to manage those trades. This stock has been on a rip-roar move to the upside. We all know why, the AI hype. I think AI is legit. I think the semis is a great way to play it. I just think the market is getting a little over its skis here. And I've said it before, love the company, hate the price. So let's take a look at their previous earnings. I like to do this on TradingView. You can click down here and see. So earnings here, 7.5 billion, 8 billion, 7 billion, 5 billion, 6 billion, and estimate tomorrow is 6.5 billion in revenue. This company is $757 billion in market cap. I don't have it pulled up here. I think this is the 6th largest company in the world. Pretty incredible for how little revenue they have. So let's look at a couple competitors. AMD is 174 billion, not 700 like NVIDIA, and their earnings were 6.5 billion, 5.5, 5.5, 5, and their next quarter they're looking at another 5. So similar revenue, a seventh of the price. Now, what's great about NVIDIA is that they are a chip designer, meaning they don't manufacture the chips. They don't have a warehouse where they build the chips. They design it and then they pay other companies to build their chips. The company that builds most of the chips is Taiwan Semiconductor. This is why there's so much fear about China taking Taiwan, is they want this company, because this company, they are the best at manufacturing high quality chips. And their revenue, 17 billion, 19 billion. This is every 3 months. 20.5 billion, 16 billion, and estimated 15.5. So their earnings are actually going down, but their market cap is only 444 billion. You could almost have 2 Taiwan Semiconductors for the price of 1 NVIDIA. So it's just, again, where there's so much hype in this company. And NVIDIA doesn't just make chips, they also sell software for their AI platform. So there is a software as a service component to this company. So I understand that. But at the end of the day, they're raking in $6 billion. And ever since I followed this stock, there's always a hype cycle behind it. Video games are going to be the best thing in the world. Oh, it's the best. NVIDIA, buy NVIDIA to play the gaming sector. Oh, video games have cooled off. Oh, okay. Then it comes back to reality. When Ethereum was having mining, you had to have NVIDIA chips, and the stock would just rip. I think that was in this phase here. And then Ethereum switched from proof of stake or proof of work to proof of stake, so there's no more mining. So you didn't need these chips. Back to reality. Metaverse. Oh my God, for the metaverse to be a thing, it needs to run on NVIDIA chips. Cycle came and went. Revenue never changed. Maybe there was a slight influx here and there. And here we are with AI. Oh my God, NVIDIA AI, it's going to be the best thing in the world. It's going to be good. It just, in my opinion, it's going to take a little bit longer for these profits to be realized. And for the valuation of the stock, it's incredible, the price that it's been. People, they don't care about price when the stock's going up, but when they report earnings and it's, ooh, yeah, we've only made 6 billion. Unless they come out tomorrow and report 10 billion, 16 billion, even then, I mean, to me, it's still expensive. Their earnings to evaluate the price need to be at 30 billion, 20 billion. That's just my opinion. So, anyways, let's talk about the options and how I'm playing this. So tomorrow, you can see over here where my cursor is, the implied volatility is 52.5, and right here, this 29.79, that is the expected move in the next 24 days. So NVIDIA is expected to move $30 in either direction. That's what the market is pricing in. And there's only 24 days here. The great setup here with NVIDIA is that I'm going to be in the 24-day options, and I'm going to look to roll to the 59-day options out in July. But I'm going to let the event happen and the volatility to crush, right? Because you can see the shorter term options have higher volatility than the longer duration here. Because we don't know what the events are going to be around this time. We know in here they have their earnings. That's why it's so high in the 3 days. And then that's an event. So there's magnified volatility because something's going to be said. So from my experience with NVIDIA, they trade up into earnings with hype of, oh, they're going to do so good. Earnings come out, numbers are so-so. The earnings call, CEO's great. Jensen Huang is great. He's going to come out and he's going to say AI 57 times. And he's going to talk about how they're going to be, they're going to cure cancer with AI and they're going to make blind babies see again and all this stuff. And the stock is going to pop after earnings. After the earnings pop, that's when you really get heavy in the shorts. That's my experience. That's my strategy. That's what I'm going to do. Because this stock has already gone so far. How much further can it go? Can go a lot further. I just don't feel that is likely. So when you're trading, you're playing a game of probabilities. And I think it's much more likely that this stock has maybe a little bit more to go, but it's going to have to make a correction or just settle out here for a little bit. So here's what I'm doing. I am selling the 260 puts. I just put these on before the close. I've been selling the calls and I've been making profits there. But I don't want to be too short going into here because, again, the hype is going to push it up. So I'm selling 260 puts. The stock is 306. So this is outside of the expected move, right? So that, to me, is a good risk reward because if the stock, it needs to fall $50 for me to be at risk of assignment. And if we get there, I'm going to roll out anyways. So I'm selling 2 puts and 3 calls as of right now. I'm going to sell more calls than puts because I think there's more likelihood of going down than up. Again, that initial move might be up, but within the next 24 days, it might pop and then fizzle out because it's going to give people a chance to get out with their profits if we have a nice pop. So I'm selling 3 of the 350 calls. I was selling the 360 calls. I was selling those when they were $500. Now they're $200. So I've collected profits there and I've rolled my calls down. So I'm selling the 350 calls. This is still outside of the expected move. It can always move more than what is expected, but this is what the market is pricing in. So I'm selling the 350 calls. I think I was selling these at 350 and now they're 330. Who knows what they open at tomorrow? But I'm selling 3 calls and 2 puts. So I'm net short. My strategy here, whichever way the stock moves, let's say the stock moves up, I'm going to close my puts for a profit, and then I'm going to roll my calls out to the 60 days strikes. So volatility is going to crush no matter what after the earnings. But if we look at the calls here, they got a lot of juice in them. I mean, these 370 calls here for 420, 440, that's some good juice right there. And that's 87 probability of profit. So I may even look to roll out to these before the earnings come out and leave the puts on the more short term. So anyways, that is my strategy here. I'm in the 24-day options. I'm probably going to hold those, see how the day works tomorrow. If it's green heading into tomorrow, I may look to roll my calls out already and then manage them from there. But I think there's some good money to be made here on both sides, right? Because I'm selling the 260s and collecting $230 for the put. I don't want to buy NVIDIA at $260. If I had a gun to my head, I guess I would if I couldn't roll out. But I've got plenty of other options to roll out of here, right? So if the stock were to open up at 270 on Thursday, I'd close my calls out for a profit, so those would basically be worth nothing. So I would collect $1,000 there, and I would have to use that money to roll out of these puts. and then I would have to roll from July 21st. I would probably sell like a 250, 230 put. I'd actually like to own NVIDIA in the low 200s. I don't know if we'll ever get there with all the hype, but even these already have some juice, and if the stock drops that far, these are going to be even more juicy. So I'll be able to make money either way because the stock can only go one direction, right? It can't go down and up $30. So I'm going to make money on one side of this trade, and then I'm going to manage the other side. So I hope that makes sense there. Lastly, I want to go over the valuation here so you can just make sure that I'm not some crazy guy. But when we look at the valuation for stocks, we like to compare it to its former self. So right now, its price to earnings non-GAAP is 93, which is really high. But again, its 5-year average is 50. So you're paying almost double what its 5-year average for valuation is. That just shows you it's a little frothy. So we need to see these earnings realized at some point, because it's like I said, it's been Ethereum, it's been gaming, it's been metaverse, and now it's AI. So eventually we need to have less hype and more earnings. That's my only issue with this company. But it's really good profitability because they don't manufacture the chips. They just design it. They have their SaaS side for AI. So there's so many great things with this company. This is definitely something you want to own long term, but just not at this price. I had the same problem with Enphase, and look at where Enphase is at. I've been wanting to own Enphase for a long time, but I'm just being patient because its valuation was always trading at a very high premium, and eventually it cracked. So Enphase even makes, no, they don't make anything near NVIDIA. So that's all I got for you. I got to make these videos shorter. One day I will. Peace out.